If you want to know how to invest in 2025 and 2026, I've got just the thing for you. 2025 has only been about one single thing: artificial intelligence. AI has been just about the only topic on people's minds, with a few smart investors keeping their eye on gold as well. Now this month, AI is struggling, the NASDAQ is down. However, I've got another sector you need to look at. So I'm Matt Weinschenk. I've been doing this kind of work for nearly 20 years now, and today I want to tell you about metals, mining, and minerals. So in this video, I'm going to give you 3 reasons these stocks have been moving and will keep moving. And these are big, world-changing stories that you need to know about. I'm going to tell you everything you need to know here, but I also want you to know I've got a longer, deeper presentation from 2 of the leading mining experts in the world. If you want to go deep, check out AmericanMiningStocks.com or scan this QR code. But listen, I get that mining sounds boring, at least compared to the excitement of generating intelligence from software, but it's profitable, and I believe it's only going to get more so for 3 big reasons. We're dramatically short of metals and minerals. That's a big claim. You know, sometimes you might hear we're short on copper or zinc or some other oddball metal you've never heard of, like lithium or antimony. But this is bigger than a quirky little shortage. We are short them all. And mining stocks are the companies that pull these commodities out of the ground. And this shortage is powering those stocks higher. So in the US, the Spider Metals and Mining Fund has rocketed from $50 to $100 per share this year alone. But this isn't going to be just a blip on the radar. There are 3 long-run reasons that these stocks are soaring. Those reasons are going to power earnings higher, and that's going to keep prices moving. So even with this move already, mining stocks are still cheaper than the broader market. And we've been waiting a long time for this move. Look at this chart of U.S. mining stocks again, a 0 return from 2010 to 2024. That's during an era of booming markets, low interest rates, and strong economic growth. As an investment, mining stocks had been left for dead. No one wanted to touch them, but now that's changing. And it actually leads to the first reason that mining is back. So, number 1, for decades, no one wanted to invest in mining. That left the industry short on capital, and therefore mining companies didn't invest in new projects. It takes a very long time to develop a mine. If you want zinc or iron today, you should have started working on it 10 or 20 years ago. And again, we're talking about all kinds of metals, but the best example here is copper. This chart here shows the number of major copper discoveries each year. And back in the 1990s, we discovered 10 or more new major copper deposits per year. Now it's dropped to 1 or even 0. And if you haven't noticed, we still use tons of copper, right? Consumption has only been growing, but the mines are getting older and they hold lower grade deposits, and eventually the holes go empty. And you could tell a similar story for all the metals. If you look at the top 40 global mining companies, they've only invested about $70 billion per year in capital expenditures for the last decade. Now, $70 billion sounds like a lot of money, but it's less than Americans spend on food delivery or lottery tickets. And that spending is supposed to grow the supply of metals we need for the global economy, and it's just not enough. So, put simply, we have a shortage because we haven't been spending to find new metal. And that brings me to number 2. The world is rebuilding industry, right? The way the industrial world works is changing. We're spreading out production. Nations have decided they want to produce more goods in their own countries. We no longer want to get all of our semiconductor chips from Taiwan or all of our rare earths from China. So we're building new factories, new mines, new chip foundries. All this takes metals and materials. And there's more. We're electrifying, right? We're moving from fossil fuel energy sources to a grid run by electricity. That requires new power lines, new power plants, solar cells. Electric cars use immense amounts of metals and minerals for their batteries. And we're also building these massive data centers. So all this just means more and more. The great machinery of global production is gearing up to gobble more metals and other critical minerals in pursuit of a new way of producing all the things we need in this world, and it's only going to drive demand up. And that is why we see a ton of involvement from the third driver, and that's the government. The government relationship to mining has totally flipped. The U.S. government used to stand in the way of mining. Mining's dangerous and dirty, and from permitting to environmental reviews, the endless red tape could halt projects for decades, literally decades. Now, the government has decided it wants to drive mining projects forward rather than slow them down. The government's taken stakes in and cut deals with mining companies that it deems critical to national security and the national interest. Companies like MP Materials, Lithium Americas, and Trilogy Metals all got sweetheart deals with the government as it looks to encourage minerals production, and their shares rocketed. A lot of these stocks do cool a bit after the initial excitement, but the returns here are impressive, and there's only going to be more of these coming. And you don't even need a U.S. government deal for this to work. Even the major global mining companies have been on the rise. Look at Brazilian mining giant Vale or Britain's Rio Tinto. And these moves appear more sustainable because they're based on fundamentals rather than a single announcement. Look, the market's been a one-note story for the last several years with the AI frenzy driving returns. Mining stocks look to be the second biggest story of 2025 and perhaps the biggest of 2026. So, to talk more about how big this opportunity is, I brought in Nick Hodge. Nick is the editor of Underground Alpha. It's a research service focused on the mining sector. Nick knows this industry inside and out. He's got an incredible track record, including multiple 10-baggers, and he even wrote the book Energy Investing for Dummies. So, Nick, thank you very much for joining me. I want to get to mining and minerals and all that, but I want to hear a great investing story I know you have first. Can you tell me about something called a giant keyhole limpet? What is that?
Oh man, Matt, it's been a while since somebody asked me about a giant keyhole limpet, and I always like when I get to say the scientific name, Megathura crenulata. That was essentially a sea snail that was being bred in aquaculture off the coast of Los Angeles in a little port called Port Hueneme. And the reason I was interested in that and actually made a lot of money in that stock for my subscribers about 10 or 12 years ago was they were extracting the blood of these limpets and they were using it as an adjuvant, which is sort of an ingredient that the medical community adds to vaccines to boost the immuno response. And typically they use sheep's blood or some other substance, but for certain vaccines, only this keyhole limpet's blood would do. And it was so rare because these sea snails only live in a certain part of the world that their blood was selling for $100,000 per gram. And there was only one company that could produce that blood, and they were doing it sustainably because they had the snails in aquaculture on land, and they were pumping the salt water through their tanks and extracting the blood and then doing it again and again. And it was a fantastic investment story, and I had a lot of readers that made a lot of money on that. I went out and visited the port, brought a cameraman with me, and essentially it was a career maker. It was one of my first big wins in the newsletter and investment space.
I just love to picture you as an investor digging into a snail culture to find out how this stuff works. It's just a very cool story.
It was super fun.
But now you focus most of your time on the resource sector, and this is a tricky sector for people. And I've talked about the big macro drivers here, but I think when it comes down to picking actual mining stocks, I hear it's more about who you know than what you know. Why is that the case?
Well, I always talk about the famous Mark Twain quote that a gold mine or a mine is a hole in the ground with a liar standing next to it. And lots of people aren't geologists and you can't see underground. It takes a very long time to explore for, develop, and extract these resources. And so you really have to have a certain technical and market expertise. And there's not a lot of people in the world that have that. So you want to stick with the serially successful people. There's also a lot of risk and a lot of what we call lifestyle companies in the resource space where companies, in fact, aren't trying to mine anything but their shareholders' pockets. So you really got to be cognizant of who the good people in the space are and what the good companies are. And so as investors and as an investor myself and a newsletter writer, I try to stick with what we call the serially successful people, those folks that have found mines and built them before, because success tends to breed success. If you listen to Rick Rule, who I've been doing some investing with lately, we've been in some similar deals. That's what he says as well. The Robert Friedlands of the world, the Lundin family, the Ross Beatties. I've heard him say again and again, these are folks that have found multiple mines and have made money not just for themselves but for their shareholders again and again. And those are the people you want to identify and stick with as they find and explore and develop new projects in this space.
Yeah, so I like to think of it that it's not just about the minerals in the ground. There's a whole financial play here, and the difference between a mining company that's creating value and one that's just trying to get a paycheck is huge. Like, these stocks are going to have very different performance.
For sure. I mean, sometimes you wonder, you buy a stock and it goes down and you're wondering where the selling is coming from. Well, more often than not in the junior mining space, in the TSXV space, some of that selling is coming from insiders because they have lots of what we call cheap shares. The company wasn't structured well, or it was structured to benefit insiders and not to benefit shareholders. So, I talk a lot about share structure and you talk about value creation, but the way a company is structured yields benefits for shareholders if it's structured right and not just for insiders. What we mean by that is, the insiders are registered. They have to report when they sell. They're not holding shares, in families' accounts or in numbered companies or LLCs that don't have to report. And they didn't sell themselves a bunch of cheap shares when the company was founded or put together. So those are some of the, the red flags we look for and try to avoid in this space. We look for good people, going back to your first question, that by extension have good share structure in their companies that allow all stakeholders and shareholders to benefit when there is success, which is hard in the mining space. Something like 1 in 1,000 exploration targets ends up becoming a mine. That's very, very low odds. And then even if you do find something, then you've typically had to fight the NGOs, or the local communities, and in fact the government, the three-lettered agencies, right? The Forest Service, the BLM, the EPA, whatever it is. And fundamentally, there's been a shift in that last part of what I just said, in that we're now streamlining the permitting and trying to get these assets online faster because of the critical nature of them and the dependence that we have on them for other countries. We rely on China and Myanmar and Russia and Russia's satellite states for many of these minerals. Maybe we'll talk about some of that, but you need good people that structure the companies well, that allow all shareholders to benefit.
And that's what I wanted to ask you about. The government's been making moves. These stocks are already going up. But is there still room to run here? Like, we haven't secured all the metals we need, right? There's still more of this to come, don't you think?
Not even close, Matt. I mean, just take uranium as one example. In the U.S., we need 50 million pounds of it per year, and we produce 1 million pounds. So we have a long way to go. Take rare earths as another example. We're something like 80 to 90% reliant on China for those rare earths, both the light rare earths, the NdPr, the neodymium, and the dysprosium, but more importantly, the heavy rare earths, the ones that are even harder to pronounce, like yttrium and terbium. We don't produce any of those hardly in the United States. Even MP Materials, which has been in the headlines lately, doesn't produce any of those heavy rare earths. So in farming parlance, we've still got a long road to hoe as it comes to developing these metals and minerals in the United States. And the amount of investment that's come so far isn't even close to what we need. I think the U.S. government invested something like $400 million with an M into MP Materials, but after that they announced a multi-billion-dollar platform to continue investing and supporting the development of not just rare earths, but all the metals that are critical, and some are critical that you wouldn't even believe, like gold is on the critical metal list, for example, and copper. So there's still a long way to go, and now the so-called smart money is getting involved. Like JP Morgan has announced a $1 trillion fund to support this endeavor because they see what's going on at the federal government level. And so, no, I mean, a typical copper mine in the United States takes 30 years, 30, from the time you make the first discovery to the time you extract the first metal. And so the inertia that we've undergone in the past 2 decades exporting the supply and the refinement and the expertise in these metals, it's going to take many years and many billions, if not trillions of dollars to bring that back to U.S. shores.
Well, we've gone all the way from snails to yttrium and terbium, if I've got those right. But you mentioned gold, and does your bullish outlook on metals extend to gold even though it's already up to 4,000? Do you have a take on that?
Oh, 100%. So not only is gold on the critical metals list, as I just said, but none of the fundamental drivers that have taken gold from $2,500 18 months ago to over $4,000 have abated, right? I mean, You could look at the government debt, for example. Doge was another failure. The debt just hit $38 trillion. There's no slowing down the federal government debt train. It only expands. Or you could look at global central banks. They're still content to be buying gold, right? So, watch what they do and not what they say. You've still got central banks buying gold on a monthly basis by the ton, right? Inflation is still with us as well. You'll likely see a 3% print the next time the CPI comes out. So all those fundamental drivers of gold aren't going anywhere. And so I was giving an interview recently with another Market Rise channel, and I was telling them that there's no reason you can't see $5,000 to $6,000 gold in the next 12 to 18 months. And so still really bullish on gold, and it's still under-owned, right? It was only a couple of months ago that some of the big banks like Morgan Stanley advised increasing your allocation of gold in a traditional 60-40 portfolio where you would have 60% equities and 40% bonds. They advised owning up to 20% gold, right? 20% bonds and then 60% equities. So the financial advisors, the big banks, those folks are just now starting to come into the fold, and gold is a relatively small industry compared to something like the tech space, right? Where you have many multiples of companies that have $1 trillion market caps. The entire gold mining complex could fit inside one Apple, for example. And so it doesn't take a lot of money shifting from the broader market into these resources, whether it's gold or another one, to create some really asymmetric returns. And so I think we still got a long way to go.
Yeah, and when you look at the size of huge, national reserves moving into the tiny gold market, I mean, the moves can just be huge because those are huge numbers if they just move a small percentage, right?
Absolutely, yeah.
Yeah. Well, Nick, this is really cool and in-depth stuff. I'm sure our viewers are going to love it. Thank you so much for joining me. And if at home you want to hear more from Nick or just get up to speed on this opportunity in mining, go to AmericanMiningstocks.com or scan this QR code. Nick, in that video, Nick sits down with one of the most experienced mining investors in the world, walks you through it all. So check it out now, AmericanMiningstocks.com. And as always, like and subscribe here on YouTube so you don't miss any of our updates. Tell us what you want to hear about next. We're covering mining right now, but there's a lot of topics out there in the investment world we want to hear from you. So let us know. That is all for this week's, and I will be back soon.